We're not paying dividends, we're not repurchasing shares, we're investing, and we'll use the money for investment. If you've got a wonderful business of your own, in Peoria, Illinois, why in the world would you sell it today because of what's happening to Ukraine?
Warren Buffett is one of the most successful businessmen and investors in the world today. He is a multi-billionaire and currently acts as the chairman and chief executive officer of Berkshire Hathaway, an American multinational conglomerate holding company. Over the years, Warren has given various tips, advice, and rules on investing for those who want to succeed as well. And in this video, we will talk about 7 of these rules for investing that Warren himself used to ensure high returns on his investments. So stay tuned because we will discuss each of these rules to help you achieve success from your investments. You don't even need to have a high IQ to succeed, so make sure to watch this video to the end. This is Financial Intellect, where we promote that to be finance savvy, we are your buddy. Now let's get right into the video. Rule number 1. Understand what you're investing in. Before deciding to invest in a company, make sure that you understand the company itself. This is a very simple rule, but many people seem to disregard it. Warren himself is a testament to this strategy. Looking at his investment portfolio, you will notice that all the companies he invested in are quite simple. He invested in Southwest Airlines, which sells flights, Coca-Cola, which sells drinks, Apple, which sells iPhones and other technology, and Furniture Mart, which sells furniture. Warren makes sure that he understands the company before deciding to buy stocks of that company. You should also do the same. Your investment does not have to be extraordinary to make it big. No matter how simple your investments are, so long as you understand them, then you're good to go. So, if you want to dive into e-commerce, there is Alibaba and Amazon. If you like cars, there is Ford, Tesla, and Toyota. If you're into online technology, then there's Alphabet and Meta. There are so many options out there. But first, make sure you understand the company you want to invest in before diving headfirst. Rule number 2. When you buy a stock, plan to hold it forever. You've probably heard about this financial rule many times before. This is because this is where the compound interest will kick in that will accelerate the value of your investment. When you get dividends and you let that grow and compound, you can get more gains in the long run. Constantly buying and selling stocks will let you miss out on the benefits of compound interest. In investing, it's all about time. So next time you want to buy a stock, make sure that you plan on owning that forever. Just like Warren, who has owned stocks like Wells Fargo, American Express, and Coca-Cola for over 25 years. If the company has been performing well, there is no need to sell your stocks. Just hold on to it forever. Rule number 3. If the business does well, the stock eventually follows. This rule was picked up by Warren from the book The Intelligent Investor by Benjamin Graham, who later became his mentor. The rule is quite simple. When you buy a stock from a certain company, you own a part of that company. If the company does well, its stocks will also do well. So when investing, make sure to look for companies that have the potential in dominating the market. Look for those who have loyal consumers, those who are ahead of the competition, or those that make a high profit margin. Do not complicate yourself by diving into complicated companies. Just always remember that your stock investments largely depend on the company's performance. Thus, if the company is performing well, then your investments will do well too. Rule number 4. Most news is noise, not news. Some might disagree with this, but according to Warren, the news we hear is not necessary. In investing, the news we hear from YouTube, news channels like CNBC and BBC, and newspapers aren't always right. Just remember that they are paid to get views and readers as much as possible. So to do that, they sometimes have to create tension and hype. More viewers and readers mean they can get paid more. As Warren puts it, Owners of stocks, however, too often let the capricious and often irrational behavior of their fellow owners cause them to behave irrationally as well. Because there is so much chatter about markets, the economy, interest rates, price, behavior of stocks, etc., some investors believe it is important to listen to pundits, and worse yet, important to consider acting upon their comments. So next time you are tempted to invest because a financial guru told you to do so, take a pause instead and think about it hard. Only pay attention to important details, and that's it. Now, before we move on to the next one, if you are new to the channel, kindly give this video a like, subscribe to the channel, and turn on the notification bell so that you will know when we've posted new content such as this. Now let us continue to the next investing rule. Rule number 5. Only listen to those you know and trust. In investing, there are lots of investors and mentors you can go to. Warren himself has always been listening and learning from other investors as well. He had Benjamin Graham as a mentor who taught him about how investing works, and he has Charlie Munger as well to give him investment advice. When investing, make sure to also listen and learn from other investors as well. You have Warren Buffett. You can see his investments and the stocks he purchases every year. There is also Charlie Munger, Warren's vice chairman in Berkshire Hathaway. And then there is Ray Dalio, who we can often watch on CNBC giving various tips on investments. Also remember not to listen to every pundit who gives you interesting advice. Instead, listen and learn only from those people you know and trust. Rule number 6. Be fearful when others are greedy, and greedy when others are fearful. In today's market conditions, this rule is relevant. The market conditions in the last 11 years is a bull market where stocks have gone up over 300%. Everyone in the market gained and made money, which might make them think that they were geniuses in stock investing. Now, what will happen if everyone is overconfident in their investing skills? Everyone becomes greedy, and stock prices will overinflate because everyone wants to buy and invest. It will be harder to find a deal in the stock market because stock prices will go higher and higher. However, according to Warren, these are the times when you need to be fearful and careful with your investments. Warren himself has $214 billion in publicly traded stocks, but he made sure he also has $128 billion in cash. These might seem like a lot of money to keep in cash, but Warren is very careful with his investing strategy. In a bull market, you could say that Warren is fearful. But if the panic starts to set in, for sure Warren's greed will kick in and he will be using his cash to buy a lot of stocks when they are priced lower. Rule number 7. Buy at a price below intrinsic value. All other rules of investing will go out of the window if you do not follow this rule. Your investing strategy will even be useless if you do not consider this. Always remember that companies are not worth an infinite price no matter how good it is, no matter how much you know the company, and no matter how good the managers are. Instead, make sure that when you are buying stocks, prices are below or at intrinsic value. So when you're considering buying a Tesla car, one question you should ask yourself is it worth the price? There is no doubt that quality is good, but also remember that no car is worth an infinite price. The same also applies to business stocks. As Warren puts it, no company, no matter how wonderful, is worth an infinite price. The price is what you pay, value is what you get. So make sure to know the value of each stock before buying it. Calculate the intrinsic value and make sure it is worth the price. And those are the 7 investing rules from Warren Buffett to also help you achieve higher returns from your investments. What are your thoughts on these rules? Do you agree with Warren? Or do you have other rules and strategies in mind? Let us know in the comment section below. We love to hear your views and insights. And with that, thank you very much for watching. If you like what you've watched, stay tuned for more videos. Bye, financial buddies!